Hello everybody. Brian here from quantlabs.net. Just wanted to go through another trials and tribulations of volatility with forex trading. So right here, this RSI reg or regression simple strategy is basically testing the various currency pairs to see what's volatile. So far in our hits, it was launched not too long ago, but we'll keep our eyes if there's anything that hits. And basically what it's doing, it's just trying to test for a entry of using RSI and regression. So if the regression goes negative, it's a buy opportunity. I still have to do a lot of analysis, but I'm also trying to understand the RSI as well. Now, the one area that would be of concern, okay, so let me just show you the chart here. This chart right here is the basically the testing that I ran with the Euro US dollar. So I get about 4 positions here, as you can see. I'm using JForex, just so everybody knows. Let me just show you maybe minute data. So you can see here all the different positions that were closed and so on and so forth. Some losing, some winning. I'm not going to get into its early days with this current strategy as is. So what I've done is I've gotten some new fresh data from, of all places, IQFeed. And today is November 1st, or actually it's just after midnight going into November 2nd, but this was done in the last few hours, taking it in November 1st at 10:10 last night, 2 hours ago. So if you have been following me on how I go about finding the most volatile currency pairs, we have accomplished that. I'm not going to get into the past videos, but I will show some of the results. So here are the most volatile. We have the most volatile is the Rand, the South African Rand against the Japanese Yen, the US dollar against the Rand. We've talked about the Rand and why it's fairly volatile. And we have the US dollar against Huff. I always forget Huff. Just give me a second here. Let me just see what Huff is. You might be able to find it here in the Yahoo thing. I'm sure you're already probably laughing, going, "Oh, it's this." I'm sure it is. But let me just make sure. US dollar HUFX. So Huff, Huff, Huff. Which one is that? Well, I can never remember this. I'm not even sure if oh, Hungarian. So it's a Hungarian forint. That's why I've never heard of it. Okay, so that's the third most volatile. Euro, Australian dollars next with the Euro, British pound. Okay, so those are more volatile. So what I've done is in my script, as I said, I'm running and testing the Rand and the Japanese Yen. So I just wanted to show you a couple things of the data itself. So here is the raw data downloaded from IQFeed, being the latest minute data that we captured was here on the open interest. And you can see how low it is. It's very, very low. 8, 11, 22, 3, 3, 5, 2, 6. Now when you compare that to the more liquid currency pair like the Euro US dollar, and you compare those numbers I just read out to you, the same time frame, we got 235, 147, 110, 56, 119. Now again, this is minute data. So the time frames are a minute. So when you compare them, roughly it's times 10. Well, up to times 10. So or actually it could be even more than that, times 30. So what I'm saying is that the euro US dollar is 30 times more, has 30 times more volume than the rand against the yen. Now, with that in mind, that means it's not obviously it's gonna be hard to get uh, people to close these or exit these positions because of the volume so high. Again, I need to test that. Now, if we did a comparison against the U.S. Canadian dollar, same time frame, we can see here 8 versus 199, 11 versus 118, 22 versus 199, 3 versus 83. So once again, we've got the U.S. Canadian dollar can be times 10 times 20 versus the rand and U.S. dollar. Now, as you could tell, one of the more liquid pairs, I'd probably say here is the fourth most volatile is the Euro Australian dollar. So let's see if we've got that one open, which we do right here. So with the same time frame from 11 o'clock, sorry, 4 o'clock up to yesterday against, let's say, the just even against the rand. I mean, it's the Euro Australian dollar's got to be 5 times, 10 times when you look at these numbers here. 4 times, 30 times. So, these sort of things we need to be concerned about because I've run some tests that when you look at the charts of, let's say, the Euro US dollar, we're at, let's say, 161 all the way up to 165 over, I'm going to say, a 5-hour time frame. So if I took a 1 day, let's say start with a 4-hour time frame, the moves are very low. So we're at 1.151 to about 118. So you'd have to put on, I would believe, quite a bit of leverage. Yeah, like we're looking at just a small set of pips here. So you would have to use some extreme yeah, well, actually, this is what 23rd week, back in April, all the way up to 1.6. But we want, okay, so these are 4-hour time frames. So the moves are pretty small. So if we go from 1.165 to 1.78, that's over roughly, I guess, a 3-day time frame. Yeah, well, maybe October 25th, I believe. I'm just looking at these dates here. Meanwhile, let's check out this is the rand against the rand against the yen. Let's see what we've got here. Okay, so we're looking for the rand. So 825 all the way down to 8, which is, that's a, so let me just think, that's a 4-hour move. So that's does have quite a bit of movements. It seems to be more volatile. Yeah, but I just wanted to show you the staggering difference between the more volatile pairs, especially around the yen, around the rand versus the more highly liquid or higher volume currency pairs. It's quite different. And to make these fills, I think with the rand against the Japanese yen is going to be a big challenge, but we'll see over time. So right now we are still running this strategy to meet this condition. So I'm not sure. Let me know what you think, and we go from there. Over and out. Later.